there. Let's bring in Sarah DerGarabedian. She's Financial Director of Investment Management at Parsec Financial. Joins us now. It's nice to see you again.
Good to see you, Scott.
I hope you've heard our conversation, and I want to pivot to you. With Bank of America's Fund Manager Survey says investors have become too bullish. So sell on the vaccine news that we got this week and what may come early in 21. Do you buy into that at all? Are we too bullish? Are we too complacent?
I mean, I understand where he's coming from, and I get it, but I think Tiffany is right that, there's a lot of bad things going on right now, but we too are optimistic. And I think it's because, markets are forward-looking. They're looking through the current situation to, the clearer skies ahead. So, I don't necessarily agree that we're too bullish because, we've already seen that, when we get through some of these crises that we're, encountering, we have a rebound, and then, we'll waver for a little bit and markets will dip and there's some volatility there. But, it's going to continue that way, I think, for a little while, but longer term, once these vaccines are distributed and people are comfortable getting out and about and going back to their business, then I don't see any reason for markets not to go up at that point.
I know the market can be delusional too at times, right? I mean, the next few months-ish could be ugly in terms of life, quality of life, the virus, restrictions, et cetera. The market's just going to forget about that and just look to the other side?
Yeah. Unfortunately, yes. Well, fortunately and unfortunately. I mean, it's sad that, people don't understand, why would the market be going up when we're clearly, withstanding so much pain here on a personal basis, as humans. But that's just kind of what happens, Like I said, they're not trading on what's necessarily happening right now for the near term. They're saying, looking ahead, we can see some relief in the future. So when we do get stimulus, when we do get vaccines distributed, when all this happens, the pieces come in, and then, things will get lifted from there. So I know that it seems strange and it seems disconnected, and it is to some degree, but, the market. Yeah.
I'm confused though, because if that's your view and it's optimistic, right? You said you don't see any reason why the market wouldn't continue to go up. And the fact that the market's looking to the vaccine and past the pandemic, why you're not ready to make a pivot from tech and growth to value and the kinds of stocks that would thrive seemingly in the environment in which you describe?
Well, the reason, Scott, is that we're already there. So we don't necessarily have to pivot because we're already distributed among the sectors that are value cyclical sectors as well as tech and more secular. So that's just how we position our portfolios, because that's the whole thing. You don't know when these things are going to happen. The market is, it's just not, you can't bet on it. You can't time it very well. So, to avoid that, all along, we've been investing in some of the sectors that are out of favor. So, we talk about financials and how terrible that's been. And the thing you have to remember, though, is like when we're in these, we're in financials, we're in energy, we're in some of these industrials and discretionary and others, but we're very selective about the companies we're choosing in those sectors. So just because you're investing in financials doesn't necessarily mean you have to be all in on the banks. Going back to the discussion on Warren Buffett, saying that maybe he wants to shed some exposure, but, we may have exposure to some banks. We also have exposure to companies in capital markets like BlackRock or something like Visa. So, these are not necessarily in the same boat. And so we do this with all of the sectors. We're very much bottom up, very selective, looking at the companies and not necessarily the sector theme, although that plays into it to some degree. We're not ignoring it. We're not ignoring what's going on in the world. But, I wouldn't say, we're not going to wholesale move out of tech and into value. We're not going to wholesale make these shifts. We're going to maintain exposure to tech as well, because it's a huge part of the market. and it's got a huge secular tailwind, and you don't want to miss out on that. But you can be very selective about the companies that you invest in within that sector. So, I know Stephanie on the show loves Broadcom, so do we, for a lot of the same reasons. So, we're just not, our philosophy is that we will maintain exposure, we will maintain diversification. We will maintain diversification internationally as well.
Yeah. No, we've had a lot of calls late to take a look at emerging markets and stuff, and I hear you on your, sort of barbell approach, if you will, especially since you called out Steph, and she likes to talk about that a lot too. Sarah, it's good to talk to you. We'll see you soon. That's Sarah DerGarabedian joining us there. We're talking